it sure seems as though this market wants to find a way to accentuate the positive. It takes missile strikes. It can survive assassinations of top generals of enemy states, and yet the market finds a way to hold its ground. Is that comforting or a little scary for investors out there?
Well, I think it means investors need to be a little bit cautious, right? All last year, we talked to our clients and said, you have to ignore the headlines that are out there and really look at longer term investing. Of course, last year, the headlines were all about the trade war, right? So it was tweets coming out and you didn't know what was true and what wasn't at the time. This event yesterday is a little bit more than that. It's not just a headline. It's definitive actions that we have to determine if there's going to be longer term consequences. But for now, I think the market is really latching on to the positive sentiment that we're seeing that perhaps there's not going to be continued escalation from this point forward. People are looking at the U.S. economy. They're looking at the global economy, and they're anticipating that this year, as we go through 2020, that some of the positive notes and some of those tailwinds that we had from the end of last year are going to continue through, whether that's a strong consumer, a good labor market, economic numbers holding their own, and people are looking at that as they prepare for the rest of this year.
What does it say, Victoria, that we can have massive geopolitical events like we've seen, and yet sit here, you and I, talking about the idea that the global economy may be sound, that we could have green shoots, and that turnarounds and manufacturing around the world could be at play? Does that then mean that geopolitics does not become as much of a factor in the coming months?
I would say that it's not as much of a factor. There's a lot of different elements at play. It's not just the Iran situation. You know, we also have to look at North Korea. We have Brexit coming up. There's other things that are at play, and we have to look and see, you know, is it going to be short-term volatility from these issues, which I think is what the market is anticipating, or is it going to be longer-term effects? If it's just short-term volatility, then people go back and start looking at those fundamentals again. We've got earnings kicking off. We've got good economic numbers. We had German numbers. Factory production was down a little bit, but the services numbers are doing really well there, just like we're seeing here in the U.S. So as long as it's a short-term measure, a short-term volatile turn in the markets, investors are tending to look past that and look at more longer term.
All right, so let's talk about these shallower pullbacks that we're seeing in the market given these risks. What then goes on investor shopping lists if these pullbacks do come, even if they are just 1%, 2%, or 3% at a time?
Sure. So some of the things that we're looking at, some of our latest buys that we would actually continue to add to going forward on some pullbacks would be names like Apple, Amazon, MasterCard. Those are three of the names that we've been purchasing. Again, we're looking at names that have strong fundamentals to them, good balance sheets that are associated with them, and strong cash flows. Looking for opportunities when these names come back to add. We're not going all in on particular sectors, although we do think that kind of secular growth story continues to do well in 2020. We're not all in on the whole reversion to the mean with the energy names. So we would look at some of those other names we mentioned to add to your portfolio on pullbacks.